In this video, I'm going to show you guys my step-by-step process on how you can make 2% per day passively. That's right, passively, without having to do anything through yield farming. Happy New Year. It's 2025, and this is going to be remembered as the golden age for not just the bull market, but the golden age of yield farming as well. And in this video, I'm going to explain why. I'm going to show you some of my live pools, why I got into this pool, and how I'm making 2% per day right now. And I'm gonna show you literally real time all of the analytics and everything that goes behind it. So before we get started, I do have to say none of this should be taken as financial advice. These are my own perspectives, research, and opinions, and should be treated as such, okay? So without further ado, let's jump straight into it, starting off with what is yield farming? So if this is your first time on the channel, yield farming is a way to get a yield on your assets, right? Passively is the key. There's 4 ways. You can stake your funds on the borrowing and lending platform. You can stake your funds on an insurance platform. You can stake your funds on a blockchain staking contract such as ETH 2.0. But the way that we're going to be talking about in this video, and the most profitable way to yield farm, at least right now, is staking your fund on decentralized exchanges and getting paid when people trade back and forth between the pairs that you stake in. So for example, let's say I want to get paid in ETH and USDC. You pick the price. This is concentrated liquidity. This is another step. You can say, hey, here's my ETH, here's my USDC. Only use my liquidity when the price of ETH is between 2,000 to 5,000, whatever range you determine, and you can use multiple ranges. And I have a multi-range pool that I'm going to show you guys that I've been in for a while. I just rebalanced last night, and it's already literally printing money. Okay, so why is 2025 going to be such a good year for yield farming? Why do I think that? Well, first, I think this is the year of the bull market, right? The Federal Reserve has been lowering interest rates for a while now, right? They just lowered them like a week ago, right before we went into the new year. We have Donald Trump in office, and I said this before he got in. It doesn't matter what you think about him, okay? Let's put our emotions to the side. The market fucking loves him, right? So that's the second thing. Crypto usually moves in 4-year cycles. We are in that 4th year again, based on the Bitcoin halving. We usually have an altcoin cycle 200 to 300 days after that, and we are literally around that time right now, okay? We have a Bitcoin and Ethereum ETF. And this is the thing I tell people, this is the most important thing. Mainstream institutional adoption can only happen for the first time once, guys. This is going to be the cycle of institutions adopting crypto. Like I said, we already have ETFs. We have more ETFs being filed. There are going to be more, right? We have Coinbase as a public company. And not even just the Federal Reserve here. Central banks around the world are lowering interest rates. So it's literally a perfect scenario for a bull market. I don't know what more we can ask for, okay? So with that bull market, when you have a bull market, that means prices are going up. In order for prices to go up, a lot of people have to be buying these coins. And if people are buying these coins, that means the people who are providing the liquidity, me and you, right? They're getting paid fees. So whenever there's an extremely high amount of buying or selling volume, there's a lot of passive income to be made. It's literally like selling shovels during a gold rush. The gold is the coins. The shovels is the liquidity we provide, and they pay us to buy our shovels. And like I said, extremely high buy and sell volume is when you make the most. When the markets go up, they typically go up like this, and things can get exponential, but things definitely go up way slower than things drop, right? Because you can think of it as like gravity. When things are falling, it's basically using gravity to its advantage or disadvantage, however you want to frame it. Right? Because you could be shorting. It could be your advantage. You could be longing. It could be your disadvantage. When the markets fall, they fall, right? The fear of loss is bigger than the desire to gain. And when you're looking at a chart, you're looking at people's fear and greed. All right? So for all those reasons, it's going to be a good year for yield farming because we're just going to be going up and up and up. And what happens is when we get into the mania phases, the centralized exchanges go down, okay? So what does that mean? That means people are going to not be able to sell at the price they want, or they're not going to be able to buy altcoins at the price they want. So they're going to spin up MetaMask wallets, Phantom wallets, all these different wallets, and they're going to come to the decentralized exchanges to buy these altcoins, right? Decentralized exchanges never go down. And that's where we're going to be providing the liquidity. And the cool thing about providing liquidity on decentralized exchanges is that the mainstream market makers that does market makers for stocks, bonds, commodities, gold, forex, precious metals, they're not legally allowed to provide liquidity in crypto. So this is why yield farming is the best opportunity for the common man to generate passive income in the history of the world. All right. So now Let me show you my pool. Let me show you my range, all my ideas on how I'm making over 2% per day right now. All right, so this is my ETH SPX position, right? So if this chart's going up, since SPX is first, that means it's outperforming ETH. If it's going down, that means ETH is outperforming SPX. Now, I've made a video on when I first got into my ETH SPX pools, and this has made me so much money. Like, I'm already playing with house money with these pools. I chose to provide liquidity for this token because I feel like this is going to be the most successful meme coin of this cycle. Like, I can see this going to between 30 to 70 billion. Some people are calling for 100. I don't know if we'll see that, but it is possible, right? So when you're going to provide liquidity, you want to be looking at the charts of the assets paired together, but you also want to be looking at its chart against the dollar. So if we look at SPX, guys, I called this out to my group months ago, right? Around when we were down here. So I've been playing with house money for a while. And if you guys want to get access to a high quality group, we have a 13-hour yield farming course. It covers the mindset you need to have in order to be a successful investor. It covers, chart mastery. So this helps you with determining your ranges, Web3 and DeFi fundamentals. How is DeFi and TradFi going to integrate? What are smart contracts? All these different things. Security protocols so you don't get hacked. Intro and advanced yield farming. And we literally teach all of the same yield farming strategies / market making strategies, whatever you want to call them, that mainstream market makers have been profitably executing for the past 300 years. And if you go here, we have our community. We're in the process of migrating our community. So we have a Discord, but it's not really active. So we're going to have our free community, and we're coming out with new price tiers here in the next few days. So be on the lookout for that. But I post different alpha in here. I posted Spore, Adam and Eve. These went up around 6x. A couple meme coins on Kraken. And then my SPX ETH, I originally posted this on October 17th. Right? And then we also have group calls, right? Where we cop on, we record all the calls, and we post the recordings here. These are timeless. So if this sounds interesting to you and you want to get access to this, our course, all of our tooling. Speaking of tooling, this is our Yield Hunter tool. It gives you access to all of the top liquidity pools and all of DeFi in real time. If you want to get access to our community and our tools and our resources, click the link in the description, book a free strategy session. You'll talk to me. I'll answer all of your questions, and we'll determine if our program is a good fit for you. If not, hey, at least you made a friend and we're helping to point you in the right direction. Going back to this, you can see that this is at an all-time high right now. It's at $1.30, right? It kind of just exploded out of nowhere, okay? So I had to go ahead and rearrange this, right? So I have 3 ranges here. Anytime the price is between these 2 yellow lines, I'm making passive income. Anytime the price is between these 2 red lines, I'm making passive income. And anytime the price is between these 2 green lines, I'm making passive income. I like to think about yield farming as like, it's almost like you have that ball in the middle and you're holding the string and you're basically trying to keep it in the middle. When it goes up, you're going to raise your hand a little bit. When it goes down, same thing. You're kind of just it's a balancing act. It's the same thing here. You can look at it as fishing as well. You can fish with a really, really small net, and it can allow you to be more, flexible, or you can have a wider net, right? Where you'll catch more fish, okay? So the wider your range, the lower your passive income, but also the lower your risk, because it's going to be much harder for price to go outside of my green box, right? It's literally 300%, almost 294%. So I have the most money there because it's the least risky. Have the second most amount of money in this red one. It's 100%, give or take, 98. And then I put the least amount in this small yellow range. And you can see that this one is 40%, right? And when I rebalanced it, price was around right here. So I might have to rebalance this one again. We'll see what happens with the price. So if you go to revert.finance, it allows you to connect your wallet and show all of your positions. This is the green one, the widest range. This one is the red one, and this 4 gram one here is the yellow one. Like I said, the tighter your range, the higher your risk, but also the higher your yield. The good thing I like about this ETH SPX pair is it's a 1% fee tier. So there's a 1% fee in addition to the trading fees that they charge. So this one is paying a lot more. But my point is, I rebalanced these last night, and if I expand it, you can see 23 hours, 48 minutes. Expand this one. 23 hours, 31 minutes. And if I expand this one, same thing, 23 hours and 40 minutes. I've made more money in my tight range pool with only 4 grand than I did with 14 grand in the wider range, right? Because the fee is almost 2%. When I just checked a few hours ago, it was 600 and something percent. Right now, it's only 591. Oh, It's so funny when you yield farm and you see a APR of 100% or less than 200. It's like, oh, that's shitty, because we're so spoiled because DeFi yields are so good, especially in high volatile times such as these. But yeah, 168%, 292%, 591%. And as this thing is going up and up and up, and we go to hit, like right now it's at a $1 billion market cap, 1.2. As it goes to 5, 10, 20 billion, the yields, like when you're in range for these big green candles, that's where most of your yield comes from. Same with these big red ones, right? Now, why am I in an ETH SPX pool instead of SPX USDC or ETH USDC? Well, I actually am in an ETH USDC, but the reason why I didn't pair SPX with USDC is because we're, like I said in the beginning of the video, we're in a bull market. There are optimal strategies for yield farming during bull markets, bear markets, and sideways markets. When you're in a bull market, you are going to want to be in volatile pools, which means altcoins paired with other altcoins. In this case, SPX paired with ETH. And the reason being is because a rising tide raises all ships. So as ETH is pumping, SPX is pumping, and vice versa, most likely. Like, you want to make sure these assets are correlated. Okay. Now, if I were to pair SPX with USDC, when SPX went and did this 2x in the past couple days, it would have been way harder for me to stay in range, and I wouldn't have made as much because I would have had to make my range a lot wider. But if SPX does a 2x and ETH does a 2x, this chart is going to stay exactly the same because they're both rising. Remember, this is its performance against each other. And if they both do a 2x, things are going to stay flat. But your principal is still going to rise in your liquidity pools. And if people are exchanging ETH for SPX and SPX for ETH, which they are, because if you look on our Yield Hunter tool and you type in SPX, you can see that most of the trading volume happens with ETH SPX, right? This is one here on Uniswap, and it's trading volume of 1.2 million, right? People are mostly holding ETH right now, and they want to buy SPX with ETH, not USDC as much. That's just how it is. So you're kind of just aligning yourself with where the tide is, okay? So what I'm doing is I'm taking my SPX and my ETH, and I've been in this pool for months, like I said. I've just been taking my rewards and sending them to other wallets. So now all of that SPX that I accumulated for the past few months and grew my SPX bag, well, hey, guess what happened to that bag? It's big up, as you can see. Go back and check the videos, guys. I've been making videos on this pool since I got in it. So with that, I'd like to conclude this video. If you guys got value, drop a like, drop a comment, subscribe. We're trying to reach 3,000 subs. Share with a friend. Other than that, I thank you so much for tuning in. Let me know what yield farming strategy you want me to cover next, what altcoin you want us to review, whatever the case may be. Subscribe to our Know What Owls YouTube channel as well. But with that, thank you so much for tuning in. I love every single one of you watching, and I'll see you in the next video. Take care and trade safe.